Nitin. Morning. Thank you for joining us. Characterize the market environment for us. This week itself, first we've seen fear, and now we are experiencing excitement.
Morning. I think it's pretty much an action-packed week from the point of view of all the announcements, data points coming out. So I think what happened yesterday was the new set of numbers that came out on the IIP, especially the January downgrade, basically sparked a whole cheer around interest rate cuts and how aggressive the RBI is going to be for the next few months. And I think that's pretty much what drove the sentiment yesterday. Overnight, the U.S. markets also were pretty healthy rally. So I think things tend to kind of flip-flop back and forth based on the announcements. Let's see what happens today with the Infosys numbers, Monday inflation, Tuesday RBI. So I think it's really going to be a very reactive market, reacting to events every day, coming out of the numbers and data points.
Nitin, hi, morning. So what do you think is going to decide the market direction today? China GDP numbers and a very disappointing set at that, or do you think INFI results?
I would say probably INFI results are a little more important because that will set the tone for a very large portion of the market that seems to be defensive in nature right now. And I think barring any major surprises, I think markets should really look forward to what that will set the tone for the earnings season as well. So I think probably that's where we might be more focused, at least for the first half of the trading day.
So what is it that you're penciling in by way of expectation from INFI?
Looks like 12 to 14% will be the range for FY13. I think the fourth quarter numbers are pretty much already in the price. People aren't expecting much by way of growth. Flat quarter, probably 100 basis point decline in margins. Rupee revenues will be lower, but that's because of currency, not because of anything else. So unless the outer limit, the upper end of the range is less than the 14-15%, and if the lower end happens to be in single digits, I think that will be something the market won't like. But I think that's really the expectation right now from the market, and we also expect to be that range.
What about guidance, Nitin? If this time around Infosys management, they decide that we do not want to share or communicate with market how we expect FY13 to move, will that shock the street?
I think in a way, yes, because Infosys is the bellwether and also sets the tone for the whole earnings season. So if they start the guidance practice of not giving out any expectations, then it will be a little bit of a damper for the market. But again, I think given their experience in the last, I would say, 3 or 4 quarters, it's not unreasonable for them to expect to go down that road. One hopes.
So your gut call is they will give a guidance.
Our call is they will give a guidance at least this time.
Dollar and rupee both?
I think so, yeah.
If Infosys cracks 10% from these levels after the guidance, would you like to buy it?
Actually, we like the whole space because I think it's one of those defensives that at least will give you, that you'll get 14-15% growth from the sector. I mean, that's the NASSCOM projection as well. Currency is at this point looks like in the favor of the export segment per se, especially the IT exports. So I think we definitely like the space. Now it's really a call of investors whether they want to take a call on Infosys or some other name, but I think as a space you have to be in that space.
Then your counterpart Rajat Rajgadiya, who represents the sell side business of Motilal Oswal, is of the view that it's time to buy banks, it's time to remain overweight in PSU banks. What are your fund managers doing? Let me hear the story from the buy side manager.
Sure. Again, I think we do like the banking space because clearly the monetary easing cycle is well in place. We've seen 2 rounds of CRR cuts. We'll probably see some more action next week. Clearly something to bet on, not just from the point of view of short-term trading opportunity, but I think if you really step back and look at the banking space per se, I think you really get probably one of the best places, from the point of view of taking a call on the growth of the market and economy as well. So we do like banking space. We do have a pretty good position in most of the frontline banking names in our portfolios. Now, whether we like PSUs over private banks or not, I think that's something that we focus more on given the environment of the market. Over the last 18 months, we've been more focused on the private banks versus the PSUs.
Which ones do you like in private? ICICI Bank, HDFC Bank, Axis Bank? Your portfolio is open, so we can
right, it is.
Talk about
so again, I think it's the same names that you mentioned, but we definitely have more focus on the HDFCs of the world and versus the ICICI. So I think again, as I said, that's more because of our legacy positions in a lot of these names, but. Having said that, I think banking as a space, and again, you can go back and look at my commentary over the last 18 months. I think we've actually stayed put pretty much through the cycle with banking.
Do you think for Infosys Technologies, it is more like a Puffy Duffy situation after the change of guard? Because if I look at the 1-year performance, Infosys in last 1 year is down 10%. TCS in last 1 year is up 11%.
Clearly, I think there's been a little divergence on the leadership. Also, we've had new companies that have kind of caught up really well. I mean, Cognizant comes to mind in terms of the way they've taken the number 3 slot. But again, I think keep in mind that 1 year is not going to change the fortunes of a bellwether that has been around for the last 15 years as as the leader. So it's too early to say.
But is the pecking order changing to your mind?
Well, I think again, in a competitive environment with big stakes, I think these ups and downs will happen. But I think it's too early to say whether the order has changed.
20% is not a small up and down.
True.
I mean, this is serious outperformance or underperformance. You're not answering my question. You're hedging yourself.
No, let's not forget, that 1 year, in a history of 5-7 years of both companies being public, I don't think is the right way to take a judgment.
And Nitin, it seems like the market pretty much had an inkling of the kind of numbers that would come up if you were to map the spot stock in yesterday's trade and even the ADR overnight.
Again, I think as we started the show, I talked about a 100 basis point decline expectation on the margins, pretty much a flat quarter from a dollar point of view, and I think that's what's going to come in. So, let's wait and watch and see what happens to the commentary and how the earnings call goes and the analyst meet goes, and then we'll have a better picture of what the next year looks like.
Try and connect U.S. economy with the IT spending. At a time when U.S. economy is bouncing back, why do you think Infosys Technologies is again and again, revisiting that basic concern points that they lack visibility?
Again, I think, one, it's too early to say whether the economy is bouncing back in a real way or it's really all stimulus-driven. And again, overnight, it looks like we'll have another round of stimulus. So, whenever you have a stimulus-driven, bump up in the economy, it's not something that sustains discretionary spending, especially on things like IT. So I think there is a little bit of truth in the fact that there's uncertainty on discretionary IT spend. But having said that, I think, one has to take that as a business reality and move forward. So I think if there are other firms and if there are competitors of Infosys that have a much better positioning, then I think it's really a plain and simple business strategy issue versus just a market issue.
It doesn't seem like, yet again we are going to see outperformance from names like a TCS or for that matter even an Hexaware from the mid-cap arena versus Infi?
Well, again, I think it's too early to say. We have to see what their numbers look like as well.
Right.
But given that Infosys always comes out of the blocks first, I think it's unfair for us to start making that comparison right away. Markets are a lot more uncertain than they were in 2006 or 7. But having said that, I think that's the reality. As I said, I think it's important to see what the aggregate IT numbers look like from probably 4 or 5 other peers of Infosys. And
so
then
let's say if you have to construct a portfolio for next 12 months, a percentage of the total portfolio, how much will be in IT and how much will be in Infosys?
We'll probably at least have a market neutral position, if not overweight. I think that's the way we are looking at it.